let's draw this on first so I can get it into our pro trade log, and then we can look at it later. We're looking at a bat pattern here. Let's get my ADDs, but hold on, actually. Yep, let's get my 86 on. Bang, pattern tool, swing low to swing high, X to A to B, B to C, C to D down here, completion zone being in this area. So let me get this on real quick. All right, so we got this setting up here on the pound yen. Bigger picture, pound yen was another interesting situation here where we go back to the daily. And on the daily, if you guys remember, we had our consolidative pattern here, right? And we broke and closed above that, just barely. But the question that we had is, are we in the middle of no man's land, or are we at a place where we can expect price to go higher? And this was a difficult one because the answer is both, right? We're at a previous level of consolidation. So we're not just kind of floating in the middle of no man's land. We are at a zone where we would expect some struggles to break through. But with that being said, if you had to pinpoint the most important part of the zone, for me at least, it would be up here a little bit higher, right underneath 214s. So there is room, certainly room for continued expansion here, but it's not as clear sailing as some other examples. Now, kind of perfectly following up on the question about higher time frame biases influencing patterns. Well, if you're seeing this as a flag with a breakout and a retest of that flag, one of the ways that you can trade flags, right? We know there's three ways. There's the before, where you position yourself at the bottom of the range and look for the breakout. Boom. There is the during, where you position yourself right at the breakout and you look to get involved while it's breaking out. Boom. Or there's the after, where you wait for the confirmed breakout, you wait for the pullback, and you look to get involved in the pullback. Well, this would be a perfect example of a pullback. We broke out of our range. We're retracing back in, and you're looking to pull back and potentially shoot for a move higher. Well, if you're looking for an excuse to get involved in the pullback, what do we have here? Well, we've got a potential bullish bat that aligns with the pullback of the bigger bullish flag. I'm going to get this into the pro trade log as well. So this is one where the higher time frame may have an influence on how you trade that pattern, whether you trade it as just a bat, regardless, whether you trade it as simply an entry excuse into that flag pullback, or whether you trade it as both, where you take a partial off for a pattern, but then you leave a partial on for a continuation. So yeah, decent opportunity here on pound yen. And again, not a free sailing zone here. So it's not free money in this zone, but can we potentially go up to 213.85s? I certainly think we can. Let's see if there's any other maybe reasons we want to look for maybe a more conservative target profit. What are some things I can do here? What can I bring on here? This is a tricky one. There's a few ways to do this. Let's bring a Fibonacci extension on from our flagpole, right? This area right here to the high of our flag. And let's see what lurks up in that area. I have a 127 at about 213 even. I can tell you right now, an equal measure move is going to put us way above those highs, so I'm not interested in that. I'll show you anyway, because I know you guys don't believe me, but an equal measure move is gonna put us well above that level. I'm not, I can tell you for sure, I'm not interested above that level. So that's not what I'm interested in. Another method for breakout patterns, I don't personally do this at all. I don't use this, but it was a kind of a classic method that's used is you take the range of the pattern. So the high of this flag to the low of this flag, and then you expect an equal range breakout. So I would put this above the high, and you can see that an equal range breakout would put us right here. Does that make sense? What I did right there with equal range? I took the high and the low of the flag pattern. Again, I don't personally use this. I've never tested it, so I don't know if it's good or not. But I know it's one of the classic methods that are used with flag patterns. And that one puts us right above the 213 as well, 213.19s. And then lastly, you can always take from a smaller perspective, right? This was the X to A of the bat pattern, excuse me. This was the leg that ended up breaking out of the flag, right? So this would be our last technical extension, Fibonacci extension from that swing low to that swing high and back down. And oh, look at that, we got a 1618 right on that 213 level. So I tell you what, if you're looking for a conservative target for this, I would say is 212.91s. 212.91s to 213 evens. Let's just say 212.91s will be a conservative target. And then about 213.85 would be an aggressive target. Hope you enjoyed the vid. This analysis came from one of our live trading room sessions. And hey, if you ever want to join us, feel free. It is part of your 14-day risk-free trial membership over at tier1trading.com. Just head over to the website, click start 14-day trial. It'll take you to the page. You can sign up right away and get started. We have a London session. We have a New York session. Both are recorded. If you can make it live, that's awesome. If not, you can always catch the recordings and of course, experience the other parts of the platform as well. I'll see you guys during the next video. So keep an eye on this space. And until then, plan your trade, trade your plan. Take care.